Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Ooh, this was a day. The market was down 900 points today. It was the worst day in 2 years, which was weird to think about because, with COVID, I feel like we've been in some weird time loop and time has been quite different. But yeah, that was 2 years ago. It is 2022 and 2020 was wild, right? And it's the worst day since then, which tells us a lot of information. But first off, man, that hurt. It wasn't fun. But we're gonna be all right. We're gonna be all right, and we're gonna be all right for a lot of reasons. The first being, we've been here before. If you were investing in 2020, you've heard me say this before, that sometimes days like this, one of the worst days happens, and sometimes some of the best days are right around the corner. In fact, I've said it so many times, I actually put into a presentation that I talk about. I did several presentations last week, but like this does happen. It's been quite common, and JP Morgan has research that supports this as well. Usually within 10 to 14 business days, the best day we've had of all of 22 is going to be around the corner. Now, I'm not going to tell you it's going to be on Wednesday or Tuesday or Monday, but stats tell us that it is around the corner, usually within the next 2 weeks or so. That don't mean that Monday's not gonna be bad either, right? But there are some things that you need to know and things that you can learn and take with you. Lesson number 1: like and subscribe. Now I say that facetiously, but seriously. On Monday we did talk about this. On Monday, you can go back and check the tape. I talked about Tesla's earnings, Netflix earnings, and what I expected. Now, I talked about Jay Powell and what his comments could mean on Thursday. If you watch the stock market, with the exception of Netflix, when you watch the stock market this week, everything was fine up until like maybe between 1 and 3 p.m. on Thursday when Jay Powell started speaking and the market was negative. And then it got even worse today. That was primarily because his comments centered around, what do you think? Inflation and interest rates. And he said that we may have to raise interest rates by 0.5%, also known as 50 basis points, that's 0.5%. I don't know why I call it basis points, I just do. But aside from that, he said we might have to be even more aggressive, which spooked the stock market. And the way that this works, the way that a lot of analysts look at this, and the way that we can look at it too, is when you raise interest rates, right, the stock market reacts. But if I am a company that has to borrow and you're making things more expensive for me, then my future earnings, what I think I'm going to make in the future, is going to be worth less money. So if I thought I was going to make, let's say, 100 million in 5 years, and you start to raise interest rates, then maybe it's not 100 million anymore. Maybe it's like 95, and that difference of 5 million means a lot for my company. So that's what a lot of economists and analysts are looking at. It's like, man, look, I thought you were this profitable, or would be this profitable in that year, but if you got to borrow at a higher rate and it's going to cost you more money, you're not going to be in 5 years where I thought you were going to be. So I'm going to sell. That is the logic. That is a part of what is driving the market today. But the good news, right? The other thing that we can learn here is a lot of the defensive names that I've mentioned, a lot of the value companies that I have talked about, came right down to some very, very good prices, at least in my view and estimation. And I went through from my trading account, not my long-term account. My long-term ain't moving nowhere. But for my trading account, I picked up a bunch of names today that I've been wanting to get and just fell to the right level. AEP, American Electric Power, they fell. I was trying to get them around $100 or so. They came down to that level and got that. Costco, I ran out of money, but wanted to pick up more Costco. I did get some Costco for the kids. But Costco fell pretty big today. United Healthcare is a company I've been talking about. They fell to what I thought was a good price. Dollar Tree is one I really, really wanted and finally got my hands on some shares there. Allstate also fell. It's another company I've been looking at. Now, Allstate fell a little too much and hit the stop loss, so I thought I was going to hold on to it a bit longer, but I had a stop loss, which basically says, hey, we're going to cut your losses at this point. So I had Allstate for a little bit, and then it just kept going. So unfortunately, I did not get to keep Allstate. I would have preferred to. But in either case, these are companies we talked about. I've talked about insurance stocks. I've talked about defensive stocks. Other stocks that you might want to pay attention to, other than the value ETF that I talked about yesterday. I had to do a short because I went to a concert last night. It was fire. But anyway, VTV, that's the Vanguard Value ETF. And then Dollar General and Walmart both look pretty good because they were both hitting all-time highs even when the market was very, very rough. And quite frankly, it was raggedy today. But in these moments, in these days when the market does not look great, sometimes it makes sense to buy the dip for companies that have done well. Okay, when companies have done well all year, right, for the most part, and have gone in the opposite direction of the stock market, and they happen to all fall, this is that time. This is one of those times you say, look, Costco, Dollar General, Walmart, y'all been great. And the stock market before today was down like 7%, and y'all been making money, and they just kind of fell off just a little bit today. That's a sign. That's a signal to say, look, this is a discount value day, and this is the time for me to buy the dip on those names. Now, the opposite of that is buying shares of what? Netflix. I don't think that's a discount. I don't think that's a good idea at all. They're down 60% in the last year. That doesn't make sense. But Walmart, Dollar General, Allstate, really Travelers, a lot of these insurance names make sense now, as well as more of the defensive stocks, AEP, Dollar Tree, the ones we've been talking about. This was that opportunity. This was that day. Or you could have also just dollar cost average, which is also what I did today too. So you want to pay attention. The key thing, like when I was joking about the like and subscribe, which again you should do, is when you come to this channel, right, and you learn the context of what's going on in the market or what's supposed to happen, it can help to calm you and help you to understand the context and background about what the market could react to. I've always claimed that I don't have a crystal ball. I don't. So I didn't know exactly what percent was going to drop, if it was going to drop 100%. However, right, it does give me a sense of calm and understanding about what's going on and how I should react. And my reaction was, I wanted to buy a lot of those companies anyways while I've been talking about them, right? And they came to a spot that I thought made sense, so I went ahead and picked them up, and we'll see how they do over the next few weeks, which, based on the information that we have, they should be fine, right? Inflation is going to do what inflation does. Whether the Fed raises rates, which they will, however aggressive they want to raise rates, they can do that. You still buying groceries, so that's half the battle for some of the stocks that I mentioned, right? Whether interest rates go up or down, you're still going to pay your auto insurance. And last I checked, I don't think my auto insurance bill went up. So if it hasn't, that's the one place where inflation is not affecting me. And those are cash cows. So today was bad. As a whole, today in the stock market was bad. But if you were looking for deals for companies that make sense, this was actually a really good day. All right, that's it for me. Let me know which one of those companies do you own, or do you want me to talk a lot more about on the channel for next week. I got a lot of really good content and questions I do want to get to next week, and some more grading to do. So hopefully maybe I can record some of those over the weekend or during the week, because nothing in the market is going to happen over the weekend. At least I think. We'll see. All right, that's it for me. I'll talk to you later. Bye.